It seems like your question is a bit unclear, but I'll provide information on the long-term usage and trends of Bitcoin as a digital currency. Bitcoin, created in 2009 by an unknown person or group of people using the pseudonym Satoshi Nakamoto, is the first and most well-known cryptocurrency. Over the years, Bitcoin has seen significant growth and has become a widely recognized form of digital currency. Here are some key points regarding the long-term usage of Bitcoin. Adoption and acceptance. Bitcoin has gained acceptance as a form of payment by various merchants and businesses. While it's not universally accepted, the number of places that allow Bitcoin transactions has increased over the years. Investment and store of value. Many individuals and institutional investors see Bitcoin as a store of value, similar to gold. Bitcoin's limited supply, capped at 21 million coins, and decentralized nature have contributed to its perception as digital gold. Market volatility. Bitcoin's price has been highly volatile, experiencing significant price fluctuations. This volatility can be attributed to factors such as market sentiment, regulatory developments, macroeconomic trends, and technological advancements. Blockchain technology. Bitcoin operates on a blockchain, a distributed ledger technology. The underlying blockchain technology has gained attention for its potential applications beyond cryptocurrencies, including smart contracts and decentralized finance (DeFi). Regulatory developments. Regulatory attitudes toward Bitcoin vary worldwide. Some countries embrace it, while others have imposed restrictions or outright bans. Regulatory clarity is a crucial factor influencing Bitcoin's long-term usage. Institutional interest. Institutional interest in Bitcoin has increased, with some major companies and financial institutions investing in or providing services related to cryptocurrencies. This has contributed to greater legitimacy and acceptance in traditional finance. Scalability and technical improvements. The Bitcoin network has faced challenges related to scalability and transaction speed. Ongoing efforts and debates within the community focus on technical improvements, such as the Lightning Network, to address these issues. Global economic factors. Bitcoin's long-term usage can be influenced by global economic factors, such as inflation, economic instability, and currency devaluation in certain regions. It's essential to note that the cryptocurrency space is dynamic, and developments can rapidly shape the landscape. Bitcoin's long-term success will depend on various factors, including technological advancements, regulatory environments, and broader economic trends. As it was mentioned earlier, the central aim of this case study is to focus on digital currencies such as Bitcoin. The concept of Bitcoin was developed in 2009 by Nakamoto, who introduced the idea of the decentralized currency, Skorch 2016. This idea implies that the issue of Bitcoins is not controlled by the authorities such as banks and other legal entities, but all transactions are transparent and publicly visible. It could be said that the primary reason for creating this digital currency is the need to introduce a new universal financial instrument that can be discovered as an equivalent to gold, Popper, 2015. Nonetheless, this matter implied that only a limited number of Bitcoins are released and traded within a system. Relying on software protocol helped the founders create a self-functioning network where any user with internet access could be involved in transactions that would not be controlled by the governmental institutions. Popper, 2015. It was marketed as an alternative way to save, create, and transfer money to other users. Its positioning as a decentralized network with universal currency attracted many followers who did not trust or wanted to avoid governmental authorities or banks. One of the examples of Bitcoin use is transferring money from one individual to another. For example, Alice transfers a Bitcoin with the specific identification number to Bob, while the description of this transaction is reflected anonymously in the public files. Skorch 2016. In this case, this situation signifies that one of the main benefits is the transparent nature of all actions. The concept of Bitcoin allows all participants of the network to monitor the transfers made in the system. Skorch 2016. This mechanism helps increase security in the case of money transfers from the buyer to the seller or from one individual to another. At the same time, because no information about the private user is presented publicly, the transactions can be discovered as secure, as anonymity plays a role of a protector from identity theft. Nowhere, 2016. Another advantage pertains to the fact the platform has low transaction fees. Nowhere, 2016. For example, Alice from the United States of America makes a purchase online, and she transfers a fixed number of bitcoins to the seller, who is located in Australia. In this case, the merchant has no right to increase the fees since they are set within a system. Simultaneously, this example can be referred to as another benefit that implies that purchases and transactions can be made without being dependent on the working schedules of the governmental entities. Nowhere, 2016.